So does that answer your question? It's already all-time high. Why should I buy now? It definitely, this strategy, this ETF strategy and the leaderboard strategy, it's a perfect fit for RRSP account. If you are doing a self-directed investing on RRSP account, it works perfectly. Think about it. When are you planning to withdraw RRSP account or your savings in your retirement account? Ask yourself the question. We can apply a different strategy for TFSA. That could be a swing trading. That's a different session altogether. Does it make sense? Any more questions in what I discussed now?
No, good.
Hi Vijay, sorry, I've just got one question regarding the RRSP and swing trading in TFSA that you just mentioned. So can you give us a bit more of understanding on this, like as to how we can go about it? And especially from a TFSA perspective, I've heard that we cannot do regular trading on it. So just for my understanding, unless anyone has questions regarding this as well.
Okay, I'll quickly reply. So RRSP is a retirement account in Canada. The corresponding one is Roth IRA or 401k match, I believe, in USA. So when are you going to withdraw this funds or your savings in retirement? At least 10 years, I would say. Right? It could be 15 years or after 20 years. Depends on your goal. At least 10 years. Right? Or if you are planning to work only for 5 years, let's say you want to go for take a break, sabbatical or vacation for another 1 or 2 years, you might withdraw it there. Then again, it's 5 years, at least 5 years. Plan for it, right, guys? If you don't plan, there is nothing is going to work, right? Plan, because this advice, no financial advice or financial advisor will tell. A fee only financial advisor might be, but anyone who is trying to sell his fund from a Manulife financial advisor or a Sun Life financial advisor, he won't share these things. He would say, just buy my fund. These are the list of funds I have for you. Buy one, pick one from this. He won't even let you know. He just picks a random one for you. That's how it happens, right? Most of us have RRSP from company, and they already pick a fund for you, which is targeted for 2050 retirement, 2045 retirement, or 2030 retirement. One of them, based on your age and your experience. They already picked it for you. You have no clue what is happening. First step is log in to your or ask the details, or take a look at your statements. If you have a company match, 401k match, or RRSP match, if you're getting from company, just question them. Hey, what is my fund? What are you investing on? Hey, how much commission you are taking? First ask those questions. Maybe I can guide you on this in a different session about how to plan. And the TFSA is, again, it's like a tax-free account. Whatever profit you make on TFSA, there is no tax. It's similar to the IRA or Roth IRA in US. Since there is no tax, there is something called day trading, where people can make a lot of money if they do a huge volume. So whatever profit they take from there, there is no tax. Again, it's violating the benefit given to residents, tax residents, right? So the line is not clear, like whether you do day trading in a TFSA account or swing trading in a TFSA account. How does CRA tracks you? I would say if you are not maxing out your TFSA account, they won't bother you. If you have already maxed out your TFSA and you are trying to do a day trading account, then they might catch you. And provided you are making a huge profit, then they will catch you. Otherwise, you're free to do. We are not. I believe most of us are working full time here. Anyone running business?
No. So,
Yeah.
so you touched an interesting point. So TFSA has a limit, and
Right.
you're trying to, day trade, and
Right.
let's say you end up having more than the TFSA limit, right? Well, what really happened?
Fine. Right.
I've not thought about it, but I've been trading on TFSA.
Okay, so what happens is when you have a TFSA account, your brokerage will keep reporting the information, your withdrawals and the deposits to CRA, and the number of transactions you do.
Right.
Okay. If there is a red flag, like let's say you double the money in 6 months, let's say you invested in March, even you hold all the positions for 4 months without doing day trading, you might have doubled the money in TFSA. And when you double it in TFSA, technically it's tax-free for the capital gains. Right? You try to withdraw, that is reported from your brokerage or bank to the CRA or the IRS. Just map it, guys. I think there is one person from Houston. Okay, so the broker is going to report it. So when CRA finds, oh, you doubled your money, we don't pay taxes, then they will go and check how many transactions you did. If they find a huge transaction then it's a day trading. It's a gray line. So how CRA is going to contact you back? Are they going to say, hey, pay tax on the profit you made? Or are they going to say, like, send me the list of transactions you did on this? It's all gray line, guys. I never faced it because I didn't max out my TFSA yet. So I don't know. I don't make huge profit as well. I'm still learning. So if someone has already maxed out the TFSA and they have made huge profits and they withdrawed it, in that case, if that person shares, then we come to know.
You know, the definition of this huge profit, it could be 100% of the investment. It could be like 500%. We don't know, right?
We don't know, right? Yes, exactly. We don't know. Even it could be 50% profit.
Yeah,
right? Because
50% you get
is like
50%,
still...
not 50% getting a 50% profit in a market like this, when you would have bought in March and selling it now, no matter which stock, you would be always like 50%, you know, there are more than 100 stocks or 200 stocks, maybe like that. So it's tricky.
It's tricky, yeah. The line is not clear. Yes, that's how I said. If someone who really has this much knowledge, they know where to invest really, where to invest it properly. They won't try to cheat the tax department or something, right? If they have. So it's all gray area. All we read is the news. I don't day trade in TFSA. This is what I read. This is what my friend said. What should I do? Can I do or not? It's a gray area. Technically, it's a tax-free account. So whatever profit you make or whatever loss you made there, no questions asked. Just tax-free. There is no capital gains on that. Right? Okay, let's get back to leaderboard. Who have any question in this? I'll just explain you. So first thing is see the big picture where the market is in confirmed uptrend. This will turn from green to amber or red. Based on that, you be invested 100% or 50-50 or 100% cash. Then the next thing, see the stock market today, how it looks. What are the leaders up in volume? Apple is up, CRM is up, Facebook is up, Microsoft is up, and the healthcare company is up. Yeah, there is just what happened today. That's the entire discussion or summary here. Stock market today, and then ETF market strategy. This is for those who cannot track the market. Buy and forget. I want to make a fortune for my retirement or for 10 years. So this works for them. And then if you can trade, then look into the one which the stocks are in nearing a buy point. Or if you already bought, watch for the leaders. There will be a sell signals. For example, someone is asking how to sell. Let's say Amazon. Let's say what they have. They say the stock has reached a 25% gain from the breakout. So taking profits is an option. Shares are below 10-day, but back above the 3,000 level. So it's up to you how you want to make. See, there is a 25% gain. You want to book the profit, book it, or just let it grow. Why do you want to sell it and then again enter again at a higher price? Just leave it. As long as they say market in confirmed uptrend, it's good. Why do we bother? Take some other example. Sheikh, this is an online tutorial kind of platform. What's the backstory? The company has evolved into origins as a textbook rental provider. It's a cloud-based product. It's Chegg Study. They have a revenue of $15 per month and a vast online library of textbooks. So it also provides online tutoring. So this is a new trend, right? We don't know what's the future of university. universities are not opening, at least for a year. I don't know, for 6 months or at least the next semester is in question in all the top universities. So this is the next place, right? Coursera or similar one. You may not have heard of this, but look at the fundamentals of this company. Then you decide whether to buy or not. What's the current action? They gave signal to buy at 54. Now it is at 86. The buy range was 54 to 57. So what is the analysis?
So
when did they give the signal to buy on 54.40? Which date?
2 months back, 6 weeks back. I'm not sure. I didn't track the dates when they gave.
Can we check, like from the chart? You showed one of the
Sure,
charts.
we can check. Yes, we can check. Definitely, we can check. So this is the market crash, probably February to March end here. There is a profit here. There is a buy point here. There's again the cup and handle here. So 45 point, 40 point buy point. They gave a 40 point buy point here. And they have a position, 3/4 position. So what they mean by position is half position, 3/4 position, or full position. Let's say we want to invest $1,000 in a stock. When they say half position, invest only 500. When they say 3/4, invest $750. When they say full position, invest your whatever you're ready to invest, which is $1,000 fully into that stock. That's what they mean by half position or 3/4 position. They raised the position to 3/4 on June 17. Right, there's the history here. This is the buy point, and this is that after 25%, they would suggest book your profit. It's up to you. If you feel market will not go up, see, this is the breakout happens, right? You keep buy here in the buy range. You buy here. Let's say the cup and handle came. You buy here. It's 39, and then 43. And what happens one day? Suddenly, the breakout happens. We mostly the news will say, oh, it jumped 20% on this day. So then we go into the mode, oh, it's an all-time high. I'm not going to buy it today. I will wait for a discount. Then we keep waiting for the discount. It will not happen. It keeps going up. It's the same thing with the Tesla, right? Tesla or any other company. You guys might have seen it, right? Tesla rallied to, when I had Tesla, I bought it for 180 and 300 last year. I didn't have the patience. When it came back to 350, I sold them. And then every day I'm watching 400, 500, 600, 900. And then the crash started. It came down to 350 or 400 at least, some 400. I didn't even buy at the time. I thought it's still overvalued. That's a mistake I did, right? I keep watching last 4 months. Keep watching. It keeps going up. I think now it has settled at 1,500 or 1,400. So that's the difference. We have to have a growth strategy in mind first. The value investing is dead. Value investing worked only for finance and energy sector. Right? Most of us might have bought Enbridge or any energy companies, Exxon, for dividends. Right? Why they give dividends? Because they cannot grow. The stock price cannot increase. So they have to give a dividend from somewhere from 3% to 5%. It's on the higher side. Average is 3% dividend they give. Same with the finance companies. After the market crash, the finance company doesn't resume. Let's take one finance company. Bank of America. To the bank. I'll take a Canadian bank, for example. RY.TO. So all the banks in the same sector, all the companies in the same sector will follow the same trend. So market crashed, it dropped to 30-40%. How much is it up? It's only up by 50%. It doesn't come back to the previous level. This is what happens to value investing, and it happens in a finance and energy sector. And this is value investing, and value investing is dead. Yeah, we can still believe in value investing. That's the approach you have, right? Let's say, how is the market going to be? It depends on which side you take. Are you bullish or are you bearish? I would say it's my opinion is until election, or at least 1 week or 2 weeks before election, it is bullish. I would still follow my belief, and then I will still check the leaderboard. I'll double confirm whether it's still in confirmed uptrend. Someone might say, no, the market is all-time high. It's going to crash tomorrow, anytime. So I will sell all my stocks. So they are bearish. So it depends on which side you take. Now, value investing or growth investing, which side you want to take, it's up to you. So the reason is Adobe, everyone knows. We might have ordered Domino's Pizza. Microsoft, everyone is using. I'm using Windows. I'm using Apple device, except for the work operating system, which is Windows. Everything else is Apple for me, personal devices. Everyone is ordering from Amazon, not just me. This is the new platform. So that's a growth investing, guys. So you have to think in terms of growth if you're trusting this. If you're not believing this, then you have to choose value investing.
You talked about all those parameters on that particular screen, right? They were indicated about volume, and you guys have been discussing about volumes back and forth, or it's part of the summary. How does that play into into the bigger picture?
Okay, good question. So one thing which I didn't talk about, but I am still sharing, that is the distribution days count in the big picture. If we go, so it's more of timing the market. No one can perfectly time the market. Hope you guys know what I mean by timing the market. Oh, by looking from the hindsight, I can say, oh, I could have sold all my positions by end of February, and I could have re-entered the market in the last week of March. I would have made a huge profit by doing a simple transaction there, right? It's so easy by looking now, right? But at that time, it's not easy, right? Because we don't know what is going to happen tomorrow. Monday might be the beginning of the crash. Or after 90 days, it's going to crash in one day. There might be a 10% drop all of a sudden in a day. So how to time the market? Well, no one can perfectly time the market, but we can do a late exit and late entry, right? Instead of perfect timing. So for that, we are tracking the distribution days. This is relevant because there is a rally going on, or the market is an uptrend. We have to track the distribution days now. So what is a distribution day? By definition, it is the, I'll take a graph, I'll take a chart. QQQ. Let's take QQQ and SPY charts. They have it here. The ET strategy. View chart. Okay. So that is, the question is for volume, but something relevant to volume I'm talking here. Volume is more important on intraday trading, but how the volume is relevant here, let's see. So every day there is a volume count. In the bottom of the graph, we have volume. How much is the volume here? It's 47 million. Maximum is somewhere 40 million. And it's in multiples of 10 million volume. So every day this much stocks are traded. So that's the volume. So it's a daily chart. And that's the volume. I hope it's clear. Oh, guys, again, 10 more minutes. I'll try to finish the call in 10 minutes. If anyone is still interested, they can join back after that. I still have some more time, but I'll try to finish this call in 10 minutes, guys. Okay, I don't want to waste your time. We already had a good 1 hour session, but I will be, anyone interested who can join back later as well. Okay, after the end of this meeting. Okay, I'll finish the distribution day count within the 10 minutes. I hope I answered your question. Is it Suhit who asked?
Yeah.
Okay, Suhit, yeah. The volume part is done, right? So how we make use of the volume for timing the market? Last time I told you what happened is here, the market is in uptrend. Here there's uptrend, 100% ETF exposure. There's uptrend, keep going. October 2019 till this date. What is that date? Jan 31st. They said uptrend under pressure, cut to exposure to 50%. So this is amber signal. Slow down, 50%. Market might crash because this is a huge percentage on this day happened, right? See, they are trying to predict the crash, right? Cut it to 50%, right? And then what happened? They are tracking the distribution days in a two weeks window. And they again said, okay, we thought it's some problem. Let's go back to 100%, they said here. And there is a rally again. Still you are in profit. If you still want to be safe, just convert everything back to cash. No problem. It's all recommendation. And then what happened? Here they said again 50% here, because it's very obvious. It dropped some percentage here, the next day, and the next day there's a huge drop. They said 50%. Okay, 2 times they said. In between, they resumed it back to 100%. And after 2 days, exactly after the 2 days, they said 50%. 1, 2. They said market in correction, cut exposure to 0. That means don't hold any position, just close everything. Let it be QQQ or any individual stock you're holding, cut it to 0. Keep your cash, convert your cash. Just watch what happens for next 3 weeks. Market crash. The perfect timing would have been to buy here, right? Right? Buy low, lowest point. But when did they give the uptrend signal? Here, by watching the trend. So they watch every day and they find, go back to 100 here. Okay. So from there, it's all 100%. And it's a proof, right? Last 4 months, what happened, everyone knows. There is no change in between. So how do they track the distribution days? Is a distribution day, by definition, they say it is closing, the closing price is less and the volume is high. Volume is high by some certain percentage. And there's a volume increase from here. The red is closing on a red day. There's a volume increase here. Please mute. Anyone is not talking. Thanks. Okay, the volume is, so this is a distribution day. By definition, if you want the definition, I can share you later. I just want to finish it in 5 minutes. So there is one distribution day here based on the volume and the closing price. There is another distribution day here on NASDAQ. So that means in last 2 weeks, there are 2 distribution day counts. So they give a exposure 50% and 0% signal when there is 5 to 7 distribution days in a 2 weeks period. And this is tracked separately for SPY and QQQ. Right? There is 3 on S&P 500, which is SPY, and 2 on NASDAQ index. So when there is a many red flag or yellow flag, we will get to know. So they say change it to 50%. Sell half your position. Simple. 50% means sell half your positions. Keep 50% cash. If something is worse, market is crash is imminent, they would say go 0%. Simple. You don't have to follow the news every minute or every hour. Just end of the day. Just check 5-10 minutes. We are good. We can still time the market. So is that something new you guys learned? The distribution days. I'm sharing this already. I'm highlighting it every day.
Very informative, man. Thank you.
Thank you, guys. Thank you, everyone.
Yeah, this is great.
If you're interested, yeah, thank you. I'm going to join the session back again once the call ends. Mostly it will end in 5 minutes or within 5 minutes. If you're interested, you can join back. Let's see how it goes. And yeah, thanks for the session, guys. Hope you had a good 1 hour session. And what I'm sharing is all everyday updates, what you learned today, and nothing else in the group. And which you're welcome to share about your ETF strategy. You have something in mind for ETFs or investing any good companies. You guys can share in the group. Okay.
Yep,
Thank you,
sure.
everyone.
Thank you.
Thanks for this, Vijay. Thanks, everyone. Bye.
Thank
Yeah.
you very much.
Thank you, guys. I'll be uploading this session for others to view. Okay. Feel free to join if you have time. If you have any other questions, I'll be joining back after ending this call.
Thank you.
Okay.
Okay, guys.